today's call. Can you hear me?
Yes, I can. Can you hear me?
I can hear you very well. Pleasure to talk with you today.
Sorry, say that again.
I said my pleasure.
I didn't get that.
I said my pleasure, my pleasure. You got it or not?
You're blush. No, I didn't.
All right. No worries. You can't hear me or what? Well, what is it?
No, I cannot see you.
Yeah, I'm not on camera today because I'm out of the office. But however, I am here on the call today to see how things going on for your own side.
Good. Sort of in the early process of buying a few firms. So this is kind of a new thing for us, but yeah. So we're looking at different avenues for funding this.
Yeah, all right, got it. As I can see here on your own profile, you are open for work. Is it like you are doing that to get 9 to 5, or is it like just to get exposure?
Well, so our model's a little bit different. We're an outsourced CIO currently, meaning that we work for many different firms. So yeah, we're always looking for a CIO position. We can scale this to many more firms. So we've got the investment side sort of nailed down, and now we need to, or what we are potentially investigating is whether or not we want to actually take over operationally these firms, manage the investments, and then aggregate both the operational side and the investment side. Because there's two flows of income that come off of those from each client.
Okay,
so
got it. So are you a hedge fund?
Advisor, and the client pays for the investment management piece. And so if we can capture both of those, we can pay much higher. We don't want to, but we'll be much more competitive in our bidding process.
All right, understood. So are you a hedge fund manager, or what are you building right now?
So amongst other things, we have a fund of funds for hedge funds for alternatives generally, hedge funds being a part of it. And then we have a very robust long only blocking and tackling business with a couple $1 billion.
Couple $1 billion. What the current with the management that you currently have today?
What was that?
What the current asset management that you are managing today?
The current assets under management. So
exactly.
we break it down into two, AUA and AUM. AUM is about 400 million. We're adding another 300 million to that, and then AUA is about 2.4 billion.
Okay. And since when are you live with the funds? I mean, when have you already launched the funds?
So we've been actively doing this for a while now. It's not a fund in terms of its the traditional sort of, this is a product, let's go out and sell it to people. It's really more of a process that people tap into, advisors, family offices, that sort of thing.
How they are tapping into?
How they are what?
How they are tapping into?
How we're tapping into?
Exactly. That's what you said, right?
Yeah. So maybe you misunderstood the vernacular. We're not tapping into anything. We engage with third-party managers. We allocate the funds, manage the process. It's more of a fund-to-fund structure on the alternative side, more active management on the traditional long-only side. Traditional long-only being the bigger part of the business. That's just naturally how it happens. Maybe 10%, 20% sometimes of a client's assets are eligible for some sort of alternative strategy. So we're focusing on both. Again, we're trying to cast a wide net on our process, but a very narrow focus on who we work with.
Okay, understood. So from what I can see here in the chat, you said that dude really lied to you in some way. In which part do you think that had already lied to you?
Someone lied to me?
Related to you, right? That's what you said in the chat. You feel like that dude, correct?
Oh, yeah. What? He had good returns and then couldn't raise any money? Yeah. No, that's that's a little bit of the game, right? Raising money is always a bit of a pain in the neck. It's hit or miss. We've got a decent process, but not a foolproof one. So yeah, we're looking at potentially engaging with third-party firms to help us, build relationships or to actually just act as a product manager.
Understood. Got it. And since when have you already tried to raise capital? Have you already tried to raise capital this year, by the way?
So we may be talking about two different things. So raising capital, just in terms of like getting money on the platform, we're constantly doing that. I've been doing that for years. What we're
great. How you are doing that? How are you doing that?
So we have internal mechanisms. We use advisors. Advisors are naturally out managing their money. We help them facilitate that. We help do some LinkedIn messaging, some email marketing.
Great to hear that. How things going on for it? How much are you closing for capital every year?
Well, so we've got a network of advisors. So it's not just us, it's secondary. So they're bringing in, probably last year, they brought in 100 million of new assets under management. And again, we're constantly bringing on people to our network. So it could be $1 billion this year. It could be something less. It really, we've got a couple of things in the pipeline. We're bringing on a $350 million new client as we speak. And we've got a couple more. One is about 1.5 billion, but we don't know exactly when that closes.
Got it. And how do you feel about that?
What?
How do you feel about that? How do you feel about the process?
It's fine. It just it's difficult to model in terms of when things will happen, how much will come over, so on and so forth. Even the best laid plans are, often don't pan out the way we think they do. Sometimes they work out a little bit better.
Why is that? Why is that?
Well, because we're dealing with advisors who have, decent sized egos, and one day they'll say something and the next day they'll say something else. It's just kind of the nature of the beast.
And so you don't have any structure with them? I mean, do you have any agreement with them on how they will actually operate with you? Or is it like they are just operating from their own perspective?
Well, so we have a sub-advisory agreement. And then sometimes, that's discretionary. So they will sometimes just allow us to manage the entire book of business. Other times they'll say, well, we want to do this other part. Usually takes us a few months to convince them it's not a good idea for them to do that. But there's no like, hey, we're going to get $100 million from you. It's not a product, it's a process. So that's the difference, in that we're not selling returns, we're selling a process that brings returns. We are doing manager due diligence and managing the entire process around it, taking the time out of the hands of the advisors to give them more time to go build their businesses and do the other things that drive their business, and family offices as well. So what we do is we facilitate growth. We facilitate the ability for advisors and family offices to focus on the things that actually matter, which is their families, their clients, not worry about who the best large cap growth manager is or where they're going to put money in a private equity fund. We will do that for them. And we charge them for that.
Understood. And since when are you doing the same exact methods right now to raise capital, like advisors network? Since when are you doing this?
We are constantly raising AUM, always trying to raise AUM. What we're doing now is maybe trying to raise $50 to $100 million in a fund to go buy advisory groups. It's a very popular thing to do right now. I don't love the fact that it's so expensive now to buy advisory firms, but that seems like what a lot of advisors are looking for right now. So we want to have that arrow in our quiver, so to speak, not necessarily leading with that, but there are advisors who are transitioning from to retirement, who want to take some of the chips off the table. There's lots of that business. So I think there's plenty of minority investments to be made. We're probably going to be a minority investor in multiple firms in the near future. We need to have a war chest to raise to be able to make those offers.
Okay, and what the capacity right here? What the max capacity for the strategy that you are using?
Oh gosh, we could take $1 billion and probably spend it. There's really, right now the market is so hot and competition is so steep. I am concerned about valuation, but there's no lack of people who are willing to sell a part or all of their business right now.
Okay,
absolutely no lack. There's probably 100 deals ready to be done in the next 2 months.
Understood. So you said that capacity you can take like 1 billion. And how long it would take you? Do you think that how long it would take you to raise 1 billion from what you can see right there
Oh,
in
1
their
billion is probably outside of our capabilities right now, without scaling up the marketing and really focusing on more of an institutional product. We don't really have an institutional product, so we're not talking to pension funds and all that about raising capital from them. That would take a totally different thing, which is why we're looking to partner with somebody who has those capabilities. And so that's what we're really talking about right now.
Understood. Got it. And that you are the decision maker right here, or do you have a partner?
So yeah, so you're talking about my team or like capital partners? The team all owns equity, but that we're the only holders of the equity.
Okay, got it. Has anyone in your own field today who has already raised or scaled their own fund to over 1 billion?
Anybody? Yeah, there's like 10 of them.
Okay.
Maybe more.
And how do you feel about that, or what do you think about that?
I think it's stupid money. I think what they're doing is dumb. I don't think they have a good strategy. I think they're writing checks and not doing anything to synergize those businesses, to bring them in, to cut costs, to raise abilities. I think they're writing really dumb checks to
Okay, so what do you think is the difference between you and them?
So we have a plan. We've got a plan to integrate and basically create synergies between and amongst these firms. There's lots of things that don't need to be done. You don't need to have 2 accounting systems. Accounting systems are very, very expensive, about $100,000 for each different firm, unless you're much bigger, in which case they're just more. So hundreds of thousands of dollars in there if you were to bring 4 or 5 firms together. The operational side, you don't need all of it. The investment side, you don't need all of it. We can cut out, if you bring 5 firms together and they've got revenues of $50 million and expenses of, let's say, $35 million, I'm pretty sure that we can cut out at least $5 to $7 million of expenses. And also, when you bring those together, the EBITDA multiples skyrocket. So you go from about a 6 for a $1 billion firm, maybe an 8, maybe a 10 now. And you get to be a $4 billion or $5 billion firm, you're at a 20 EBITDA multiple. So you get multiple expansion and you get EBITDA expansion.
Understood. So you think that's the difference between you and their own operation, correct?
That's the difference between me and what everyone else is doing. We are gonna bring synergies to these folks, and so that's the idea is to combine them in some meaningful way that is not being done right now. Right now, checks are being written, and that is about the extent of it. They're trying to now bring these firms in, as these other firms have gotten to be $100 to $200 billion in assets under management, several $100 million in revenues, from basically nothing a few years ago. I think these people are really dumb, and I know these people, so I know they're dumb. And I know that
but they are okay, sir. I got it. Well, they are dumb, but they have already crossed your own revenue, correct?
They have crossed the what?
They have already crossed over your own revenue. I mean, they are making more than you in the revenue and in the asset management. Is that what you said, right?
Well, they're bigger, but they've been focusing on a different market that I think is
which market
really,
they
really
have already focused on?
The advisory market. I'm not sure we're actually having a constructive conversation here.
What do you mean?
I think we're not. I think we're sort of talking past each other.
No, I mean, no, I'm here. I hear you, but I just want to also share my own message. That's the whole point right here. I just want to understand.
How much do you know about the financial services market here in the United States?
How much I know about that? Okay. I mean, I don't need to tell you how much I know. You can do research on me, all right? I'm here actually to understand your own situation. I mean, what you are doing today and what you have already done.
Well, I'm just curious how much I need to explain in order.
Yeah, you don't need to explain anything, but you just need to actually tell me how things look like inside your own firm, so I can tell if I can help you or not. That's the main thing, correct?
Inside my own firm, we've got 2 PhDs, 4 CFAs, 2 CMTs, about 200 years of combined investment management experience across multiple asset classes. We've got a marketing capability that helps basically 2 to 3x a advisor's growth trajectory. We've got operational capabilities, bringing the best technology available in the field to advisors who generally have very bad technology. So we're gonna synergize that business, reduce those costs, increase the capabilities of the firms while not adding any manpower. It was massively expanding the EBITDA multiples, massively expanding the EBITDA by reducing expenses. It's basically a PE deal where we're going in and cutting expenses, increasing the cash flow, and at the same time maximizing the multiple we're getting on that cash flow. It's a question of really execution, and we have the folks who have run businesses very successfully, exited businesses multiple times. Myself being I've exited two businesses. So we've scaled businesses in the past. We see an opportunity here for a very inefficient market, very dumb capital chasing a lot of deals that unfortunately are driving up prices, which is the only downside to what we're doing. We would like to raise a war chest to have at our disposal when markets do turn, and we think that could be in the next 6 to 12 months, 6 maybe 18. And so what we're doing now is being proactive and trying to raise capital, basically have callable capital, not necessarily deployable capital right now, when opportunities present themselves. We got a $1.5 billion opportunity. We've got a couple other $1 billion opportunities that we can deploy capital currently. We have that covered for the most part, but if we want to do more than 1 or 2 deals, we're going to need to have a good partner who can raise capital for us.
Understood. Thanks for sharing that, sir. And the fee structures that you currently have today, is it 220 or what is it?
It varies depending on what we are doing on our alternative strategies. We're actually at more of a 110. That's a fund of funds, however. And we're generally between 75 and 100 basis points on the long only stuff, which is pretty standard. That model requires a lot of scale, and we're getting there.
Okay, understood.